Today's topic is prepaid expenses.
What is prepaid expenses?
Prepaid expenses represent expenditures that have not yet been recorded by a company as an expense, but have been paid for in advance. In other words, prepaid expenses are expenditures paid in one accounting period, but will not be recognized until a later accounting period. Prepaid expenses are initially recorded as assets because they have future economic benefits and are expensed at the time when the benefits are realized, the matching principle. The two most common uses of prepaid expenses are rent and insurance. 1. Prepaid rent is rent paid in advance of the rental period. The journal entries for prepaid rent are as follows: prepaid rent account debit and cash account credit. Adjusting journal entry as the prepaid rent expires or rent due. Rent expense account debit and prepaid rent account credit. 2. Prepaid insurance is insurance paid in advance and that has not yet expired on the date of the balance sheet. Treatment for prepaid insurance is the same as of prepaid expenses. Effect of prepaid expenses on financial statements. The initial journal entry for a prepaid expense does not affect a company's financial statements. For example, refer to the example of prepaid rent. The initial journal entry for prepaid rent is a debit to prepaid rent and a credit to cash. These are both asset accounts and do not increase or decrease a company's balance sheet. Recall that prepaid expenses are considered an asset because they provide future economic benefits to the company. The adjusting journal entry for a prepaid expense, however, does affect both a company's income statement and balance sheet. Refer to the example of prepaid rent. The adjusting entry on January 31st would result in an expense of $1,000, rent expense, and a decrease in assets of $10,000, prepaid rent. The expense would show up on the income statement, while the decrease in prepaid rent of $1,000 would reduce the assets on the balance sheet by $1,000. Let's summarize the topic. Prepaid expenses are future expenses that are paid in advance and hence recognized initially as an asset. As the benefits of the expenses are recognized, the related asset account is decreased and expensed. The most common types of prepaid expenses are prepaid rent and prepaid insurance.